If you've got bad credit and you're looking for a personal loan, well, it probably feels like every lender has already slammed the door in your face. I know how it goes. You fill out the application, you hold your breath, and within seconds, denied. And just like that, your credit score drops even lower from the hard inquiry. I know it's frustrating and it's discouraging. And worst of all, it can make you feel like there's no way forward. But that couldn't be further from the truth. See, the real problem is this: most people don't know where to look, how to position themselves, or even what clever strategies exist that can unlock approvals even with less than perfect credit. See, there are lenders out there who are ready to work with you. Now, there are workarounds, loopholes, and under the radar techniques that can get you real money at a rate that you can actually manage. So in this video, I'm going to show you exactly how to do exactly that. Now, I've worked with thousands of people with bad credit, from recent graduates to even people recovering from bankruptcy. And I can tell you with absolute certainty, if you follow what I'm about to teach, you'll finally start hearing that magic word, yes, again. So let's get into it. So, first, let's talk about why you're getting denied. Now, most people assume it's just the credit score itself, but that's only part of the picture. See, what lenders are really looking at is the story behind your credit report. So, if you've had recent late payments, a lot of debt, no active trade lines, or you've applied with 5 different lenders in the last month, well, that paints a picture of financial instability. And lenders, especially the traditional banks, well, they want to avoid risk. What they don't tell you is that many institutions use their own internal algorithms. So those are systems that weigh your job history, your debt to income ratio, and even your bank account activity. So two people with the exact same score can have completely different results depending on how they present themselves and where they actually apply. See, the key isn't to apply everywhere. It's to apply strategically and to the right type of lenders. So let me start with the first clever strategy. Ditch the big name banks and look locally. Credit unions are community based and often far more lenient than national banks because they're not for profit. They focus more on relationships than raw data. So if you've got a steady income and you can sit down with someone face to face, well, many credit unions will look past that low score and offer you a second chance loan. Some even have credit builder loan programs that are structured to help you repair your credit while giving you access to small amounts of cash. Now, these programs are perfect if you need a boost without falling into the trap of high interest payday loans. So when you walk into a credit union and explain your situation honestly, especially if you've already opened a checking or savings account with them, well, you humanize yourself, and sometimes that makes all the difference. See, they're not just looking at you as an algorithm, they're looking at you as a member of their community. So, next up, there's peer to peer lending. Now, this is where private investors fund your loan instead of traditional institutions. So, think companies like Upstart, Prosper, and Lending Club. Now, they're not just looking at your credit score. What they do is they consider your education, your job field, your income stability, and your ability to repay based on more than just your past mistakes. Now, some of these platforms allow you to pre qualify using a soft inquiry, which means your score won't be affected unless you choose to proceed. Now, that's huge because it means you can shop around for the best deal without tanking your score with every single quote that you get. Now, these lenders are designed to work with people who may be rebuilding, but who show responsible financial behavior now. See, I've had clients with scores as low as 580 get approved for loans through these platforms simply because they had consistent income and a clean checking account. Now, this is where doing your homework pays off. If you go in prepared, say with bank statements, a list of income sources, and your most recent pay stubs, well, you're positioning yourself as less of a risk and more of an opportunity. So, just before we take a deeper dive, it's imperative you hit that like button and subscribe so that you get notified the minute we produce another game changing video that helps your credit situation. And I promise you, it will help and you will appreciate it. So, buckle up and let's take a deeper plunge. So, another path that's often overlooked is applying with a co signer or a joint applicant. So, if you have someone in your life, maybe a parent, a partner, or a close friend who trusts you and has a stronger credit profile, well, adding them to your application can dramatically increase your own approval odds. Now, not only does it reduce the lender's perceived risk, but it can also get you a lower interest rate. Now, in truth, this has to be done responsibly. You need to have a solid plan to make every single payment on time because if you don't, their credit takes the hit. But if you're confident in your ability to repay and you have someone willing to vouch for you, well, it's a really smart way to access capital when going it alone just isn't working for you. Now, I've seen people use a joint loan to consolidate debt, to pay off collections, or even invest in starting a small business. And in most of those cases, the loan itself became the tool that rebuilt their credit, opening doors that they thought were closed forever. Now, let's talk about a lesser known but incredibly effective option: secured personal loans. Now, unlike unsecured loans, where the lender takes the risk, secured loans requires you to back the loan with some form of collateral, like maybe a savings account, a vehicle title, or even a certificate of deposit. Now, here's why this is powerful. See, lenders are far more likely to approve you, even with bad credit, when they know they have something of value tied to the loan. And the best part? Well, these loans often report to the credit bureaus. So you're not just getting the funds, you're rebuilding your score while you repay. Now, it's also a psychological win. See, you're proving to yourself that you can borrow responsibly again, and that's important. You're shifting from damage control into growth. And that's when your financial life begins to truly change. So, finally, let me share something advanced for those really determined to climb out of the credit basement. It's called strategic stacking. Now, if you're pre approved for a soft pull loan, take it and use part of the funds to pay down your revolving credit balances. Now, that alone could cause your score to bump up within a month. Once that happens, wait 30 to 45 days and then apply for a second loan or a credit card, now with a better score and a much lower utilization ratio. So, this is not about accumulating more debt, and I want to make that very clear. It's about leveraging the momentum from one approval to position yourself for better opportunities. It takes discipline, it takes planning, and a clear payoff schedule. But done correctly, it can jumpstart your credit and give you the fresh start that you absolutely need. So here's the truth: having bad credit doesn't mean you're stuck forever. It means that you need to play smarter, not harder. Credit unions, peer lenders, joint applications, secured loans, all of these are legitimate, effective tools if you know how to use them. You don't need perfect credit. What you do need is a very smart plan. So if this helped you, leave a comment below and tell me which strategy you're most excited to try. Do me a favor, guys, like this video, subscribe, and turn on notifications because I've got more clever ways coming your way that will help you repair, rebuild, and rise on your credit score. You're not alone, you're not stuck, and your comeback starts right now. Have a great day, and I'll see you guys on the next one.